your presentation will be in English, and you're welcome to put your questions in Danish or in English when we're done here. So, you want to go first?
Yes, det vil jeg gerne.
Yes.
Mange tak, Henrik, og igen velkommen til. Tak fordi I har givet jer tid til at høre vores oplæg fra Tavex. Mit navn er der en klikker?
This is the clicker.
Yes. Og er den forkerte? Nå, det er den forkerte præsentation, der er kommet op. Det er jeg ked af. Anyways. Mit navn er Wesley Valdez. Jeg er det, der vel kalder... Jeg sidder i direktionen i Tavex og er ansvarlig for køb og alt form for handel med guld. Jeg er født i København 1978 og er oprindeligt uddannet jurist og advokat. Og har været tilknyttet virksomheden siden 2013. Vores virksomhed er en del af Tavex Group, som er en af Nordens største forhandlere af fysisk investeringsguld. Med mig i dag har vi professor Krassimir Petrov. Han er oprindeligt uddannet, han har en Ph.D. i økonomi fra University of Ohio.
Ohio State University.
Ohio State University. Han underviser, han er tilknyttet Department of Banking and Finance i Jumeirah.
No, currently in University of Fujairah.
University of Fujairah i UAE, hvor han blandt andet underviser i market analysis og økonomi. Årsagen til, vi har inviteret professor Petrov med i dag, det er fordi hos Tavex selvfølgelig, vi sælger guld. Der er ikke så meget at sige om det. Priserne går op, priserne går ned. Det er pænt at se på, og det har en masse andre gode kvaliteter. Men vi har inviteret professor Petrov med i dag, for at han ligesom kan uddanne både mig selv og jer tilhører, om hvordan han ser guldmarkedet, analyserer guldmarkedet. Og så ud fra det kan I vurdere, om guld er en fornuftig investering. Og det er sådan, vi prøver at arbejde i Tavex Group. Så med disse ord skal jeg herved overlade gulvet til professor Krassimir Petrov. Tak.
Okay. Well, thank you very much. I come originally from Bulgaria. I was a soldier in 89 during the transition years, and as communism collapsed, we experienced a horrible hyperinflation. So horrible that my family completely got wiped out. Their savings got wiped out. They lost 95 to 98% of everything they had saved for 20 years. Inflation robbed them completely. Banks went bankrupt. And I was so affected in my younger college years that I dedicated and devoted my life to inflation. And I got my bachelor's in economics, but didn't study a word about gold. I got my master's in economics, University of Delaware, did not study anything about gold. I got a PhD in economics from the Ohio State University in 1999, didn't study a single word about gold. My good best friend, we went together, got a PhD in finance, and never learned anything about gold. Gold is not taught in universities, has been cleansed completely from the universities, is the most misunderstood investment in the world. Completely forgotten. And it shows in the audience here, there are 3 or 4 young people, mostly are not so young, and I just happened to be my life to be affected. So when I had a corporate job 2000, there was a horrible stock market crash. I was in the stock market, but didn't have big investments. I was very young back then with my PhD, and I wonder how come nobody forecasted the tech bubble and the tech market crash, the technology crash. As I started searching into the real estate, into the internet, I found that there was people. They were people who actually predicted the stock market crash. They analyzed the market correctly. They were all called Austrians, students of the Austrian School of Economics. These were also the gold guys, people who understood gold, who understood credit, who understood banking. And since 2001, the last 17 years, I've devoted my life into money and banking, Austrian economics, understanding gold, understanding all of these fields, and I'll show you within barely 25 minutes of gold investment analysis. Now, investment analysis, interestingly enough, all universities talk about fundamental analysis, and they all talk about basically portfolio analysis, but universities don't really talk about behavioral analysis. They don't really talk about much about technical analysis. They don't talk about cyclical analysis, but these are even more important to time and to analyze investments. All investments, including stocks, including bonds, including real estate, including commodities, and of course, gold. So I have barely 25 minutes, but tomorrow I'll be making at the Kopenhagen Stock Exchange a lot bigger, hour and a half presentation where I can go a whole lot more into all the details related to bubbles and maybe stock market bubbles and real estate bubbles and so forth. So in cyclical analysis, I'll go spend about 5 minutes on each of these. You have bull markets and have bear markets, and bull markets can last 10, 15, 20, 30 years, and bear markets can last 10, 15, 20, or 30 years. And you got a commodity bull market. You can see the first one for the last century was 16 years. The second from 33 to 53 was 21 years. And 68 to 82 is 15 years. It appears we're now what's called a commodity super cycle that is likely going to last about 30 years, starting in 99 or 2001. We had an intermediate pullback in the during the 2008, 2012, let's say 11 till 2016 correction. So we do expect, based on cyclical analysis, roughly another 10 years of a commodity bull cycle. Well, here's an example. In this particular case, it's a Dow-gold ratio. This is how you value better gold. You don't measure the price of gold in dollars. You measure gold against stocks. And you always use the ratio of gold to stocks to value real commodities versus paper assets versus real assets. Here you see this is the stock market going up, meaning Dow to gold ratio, stock market going up, stock market crashing. Stock market going up, stock market crashing. On the way up, you want to be invested in in stocks. On the way down, you want to be invested in gold. On the way up, you want to use stocks. On the way down, you want to use gold. On the way up till 99, you want to use stocks. Here, gold. Now, this is slightly different, but it's the same chart. It's a little bit longer. It's 200 years longer. And you can see as it goes up, stocks are high and overvalued, and gold is cheap. Here, it's the opposite. Stocks are low and cheap, and gold is high and overvalued. Again, stocks are low and cheap, gold is overvalued. Out there, the opposite. This is, what's here? Oh, that's 1929. 1929, the stock market bubble, stocks extremely overvalued, gold is dirt cheap. 1932, 33, gold is, stock market has crashed 90%, stocks are cheap and gold is relatively expensive. Over there, 1966 or so, stock market peaks. Stocks are extremely overvalued. Similarly, you can see here, 1980, gold is very high, very overvalued, and stocks are cheap. 1999, it's the opposite. And we're halfway through the correction from 2000 till 2000 and roughly 10. We had an intermediate cycle over here, and the cycle currently is expected to continue for another 8-10 years. We cannot predict the length of the cycle, but it's a little easier to predict that it's going to be somewhere along into the 1 or 2 ratio. Now, when you are in a major commodity market, commodity bull market, where commodity goes up, this is simply, I borrowed from Mark Faber, it's a very nice table which tells you what in a commodity bull market performs well. And sure, you see oil performs well, farmland, all hard assets perform very well. And the harder the asset, the better the return. The hardest assets are, of course, gold, silver, and oil. Unsurprisingly, gold, silver, and oil are the top performing assets in a commodity bull market. They are also associated with corresponding underperformance of the stock market, and the stock market appears peaking right now. This was the previous presentation of the guy just 20 minutes finished ago over there. And of course, you see here at the bottom, paper assets, stocks, and bonds perform horribly during a commodity bull market. All right, so fundamental analysis, about 5 minutes. It's very straightforward. Gold is relatively undervalued currently to financial assets. You look at the Dow gold ratio. Right now, Dow is very high, 25,000. Gold is 1,300. The ratio is about 20. That's way too high. Gold, you should expect to outperform Dow within the next 10 years, easily 10 times. All right, so investment demand by smart money. Yes, smart money, managers, old money, those that have the knowledge, the experience, multi-decade experience are into it. Young generation, as they like to say, don't know how to spell the word gold. They know how to spell crypto, but not gold. All right, investment demand by big money. Well, pop question, do you know who's the biggest buyer of gold for the year 2017 in the, I mean, you all know who's the biggest buyer.
China.
Yes, the new emperor Xi Jinping, right? But it's actually not correct. His first name is Vladimir and last name Putin. He has been, for serious, for real, the biggest buyer of gold in the world. He's buying it through the Russian central bank. Anyway, so these people know what they're doing, okay? All right, inflation hedge. As inflation keeps creeping up and up and up, there's nothing better to protect your investments like gold. Inflation wipes out, and it's horrible for stocks, it's horrible for bonds. If inflation is beginning to rise, nothing comes close to protecting you like gold and or silver. It's also a currency hedge. We are in the midst of currency wars. Every country and every government is devaluing its currency against the others. China is devaluing against the dollar. Europe is devaluing against the dollar. The dollar is devaluing against everybody else. And in a currency war where all currencies are debased, is a race to the bottom. The only thing that stands is gold, because gold cannot be possibly devalued by governments. It is what it is. And it's a crisis hedge. We had a 2001 major crisis. Gold pulled up significantly. 2008, 9, 10, the global financial crisis. Gold had an extraordinary performance when everything else was crashing. Gold was moving up, 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 and up. And those who had not invested back then 10 years ago should at least remember 45 days ago in February, when stock markets around the world crashed, gold performed as expected. It was the only asset that was meaningfully up. Even bonds did not protect as well. So in times of crisis, nothing protects you like gold and possibly silver. Alternative asset to stocks, bonds, and property. Again, it doesn't mean you're all 100% in gold, but 20, 30% of gold is a very meaningful size in a portfolio. Maybe I'll have the time to complete later on. Central banks price suppressing, that don't want to get into that, not in here. And central banks, I'm talking about Western central banks, they kept selling and kept selling and kept selling. They ran out of gold, they can't sell anymore. Eastern central banks like China, Russia, and all the other Asian central banks, they keep buying and raising. So fundamentals for gold are outstanding. Now, there is additionally, because the investor demand is, you have some falling dollar, okay, as a safe haven. Again, you're scared because dollars in currencies fall, you invest in gold. You're scared about the stock market, you invest in gold. You're scared about financial market instability, like what happened in Greece and in Cyprus, you invest in gold. Potential bank bankruptcies, you don't want to keep your money in the bank. Again, if the government's going to bail them out, they'll print the money, that will devalue the currency. You'd better be in gold, okay? Political fears like war, North Korea, geopolitics, whatever it is, nuclear war, again, you better be in gold. Doesn't mean 100%, but 20 to 30% is a sufficient protection. Economic recession, yes, you definitely want to be in in gold. Why? Why? If there is an economic recession, what the government will do is slash interest rates down to zero. It's going to print a whole bunch of money to devalue the currency and stimulate exports in the economy. Again, very bad for the currency. All right, and overall uncertainty about it. Okay, sovereign wealth funds are generally buying, institutional investors, and some ETFs. All right, this is what you look, again, especially during the 2008 global financial crisis. As the European financial crisis was peaking, so was skyrocketing demand for gold. Gold performed exactly as expected. As in 2014 and 15, things stabilized, and look here, everyone's buying stocks. 2014, 15, 16, gold demand was a little bit lower, normal behavior. Let's see what else. All right, consumer demand, jewelry, Asians, whether it's India, Pakistan, Thailand, Philippines, they're all, the Middle East, Dubai, they're all crazy about invest in gold, especially in jewelry, and there's some industrial demand. Okay, now gold investors own a lot more than central banks and whatnot. Let's see what else I have. All right, this is money supply. This is central banks printing money. 2003 to 2008, money supply grows significantly just to inflate the stock market bubble and the real estate bubble. This here is the global financial crisis. In other words, when the crisis came, central bank printed more money. They devalued the currency. And from here on, you can see they literally doubled the money supply in 2 years. In other words, as central banks print money, they devalue the currency. You'd better be in gold. And gold performed remarkably well during this period. Fundamental analysis, I got about, 10 more minutes?
Two.
Oh.
Hurry up.
All right, okay, portfolio analysis. First of all, gold is uncorrelated to other investment classes. Negatively correlated to currencies. So, uncorrelated means a great portfolio diversifier. Diversifies to currencies. It's an excellent diversification to stock. It improves your risk return profile. So having stocks and some gold improves. Its scholarly research recommends, depending on the environment, 5, 10, 20%. There's also an academic research when you just value and measure the risk of gold. It is no riskier than stocks. For some reason, people have been brainwashed to believe that gold is very risky and stocks are not. Certainly not true. Highly correlated with commodities, so it does not diversify with commodities, but with everything else, stock, bond, real estate. And gold and stocks, okay. Gold stocks, that was the previous presentation, don't replace gold bullion. You need to have the bullion, you need to have the bar, you need to have the coins. When the stock market crashes, gold stocks crash with the stock market. It's only the bullion that properly protects you. Now, behavior analysis. Gold is not well understood. The young generation knows nothing about gold, okay? It's not widely recommended. I mean, not hear anything about gold, okay? It's still unloved. People still are not passionate about gold. They don't even care about gold, okay? It's still underowned. Maybe 1%, maybe 2% of investors own gold. 90% don't own any gold at all. It's very hard to value. CFAs doesn't have a cash flow. It can't be valued. It's, again, undervalued relative to stocks, relative to real estate, and it's almost forgotten after now 4 years of the bull market. It's not exciting like Bitcoin, not exciting like currency. You can't make 100% in a month return. So this type of behavior analysis says is right now is the time to buy gold when no one else is buying it because it's cheap and not exciting. There's not no time to buy stocks when everyone's buying. And let me see what else I have. A little bit of technical analysis. I can't go through right now, but tomorrow I'll have, where is it, the Kopenhagen Stock Exchange? Is it 6 o'clock? I'll spend a lot more time and we'll have a lot more for any kind of questions. Technical analysis, again, stocks and whatnot, conclusion. All right, you want to just have a little bit of diversified 5 to 10%. Now, if you want a balanced portfolio, 10 to 15%. You want to be a little bit aggressive, it's 20 to 40. Now, if you believe stock market a crisis is coming, you can put anywhere between 50 to 80. Also, the recommended percentage of gold depends on your age. If you're young, you can risk. No big deal. You can play with stocks or anything else. The older a person is, the more they have to be in bonds and gold, and the less they have to be into stocks. So gold is also age dependent. If you're relatively old age, meaning in retirement age, you don't have an income to replace, you should keep a slightly larger percentage of your wealth protected in gold. 20-30% is reasonable. Anything up to 50% is perfectly reasonable. And I think this is it. Thank you. Thank you very much.
I know it was a bit hasty. Tomorrow is free, correct?
I think it is completely free, the presentation tomorrow.
Okay.
You will make, yes.
Yes. Questions in Danish or in English?
Thank you very much for a very interesting presentation. I think you should have been given much more time, and not. But I have a question because I completely agree with you that gold is fine for investment now. But what do you think the same about silver? My question is because if you go maybe 50 or 100 years ago, the gold-silver ratio is so that today you can say, if you say gold is cheap or fair value, then compared to the old days, silver is very cheap.
Well,
you can also say the question, if you have a lot of money, would you put into gold? Would you put it 100% to gold? No. Or would you put something into silver also? How will you split between silver?
Okay, very easy, very easy. Now, don't get me started on silver because I'm a silver expert, I'm silver bull, my preference is for silver. Silver is an infinitely better investment than gold, but significantly 3-4 times more volatile. On the way up, silver goes 3 times higher, but on the way down during the crash, silver crashes 3 times bigger. So with an older age, with less tolerance for losses, gold is significantly better from a risk point of view. Silver is significantly better from a return point of view. So if the younger guys, they don't need to invest anything else, they should put all in silver. Silver has significantly higher return potential. Silver is 2, 3, 4, 5 times undervalued relative to gold. I was just discussing platinum right now is 2 or 3 times undervalued relative to gold. So these are very good investments. Yes, question?
Another question down here?
Hello?
Yes.
My question is, what is your horizon of investment in gold? Is that 2, 3, 5, 10 years, or what is your
my investment horizon is anywhere between 5 to 15 years. The horizon depends on the gold to Dow ratio. As long as the gold goes close to Dow is now 25,000 or so, and gold is, so as long as the ratio starts moving close to 3 to 1 and 2 to 1, you gotta start converting some of that gold into stocks and into more real estate. So the time frame is anywhere between 5 to 15 years, certainly not 6 months.
I would also like to add to that comment. Yes, I agree with Professor Petrov that if you look at it from a return on investment perspective, yes, 5 to 10 years, trying to balance it off. But there's also another element to investing in gold, which Professor Petrov also looked into, is that buying or investing in gold from a physical perspective also serves as a type of hedge against inflation, hedge against crisis. So obviously, yes, we all want to make a return, but one of the clear benefits of owning investment gold is you retain your buying power, you retain value. So yes, have a 10 year perspective on it, cash in at 200%. Obviously, we all want that if that opportunity arises. But even if it doesn't really manifest itself within that perspective, one of the key reasons why you should own gold is to protect yourself, is to protect your purchasing power, is protect your assets and ability to function in potentially a crashing market. So yes, 5 to 10%, but have that other element in mind if you take a position in gold.
Well, this reminds me, if I can clarify, this reminds me Charles Nenner's great saying. He put it best everywhere. Gold is never a great investment. You put your money in gold because stocks are not a good investment, because real estate is not a good, because you have nowhere else to put it, because everything's overvalued. So you invest in gold when everything else is inappropriate for investment. You buy real estate, you earn 3%. That's a joke. Real estate should earn 10, 12%. It's been earning historically that much. You buy bond, it earns 1%. That's a joke, okay, government. Bonds earn 8, 10%, okay? Stocks earn 8, 10% dividends. Now they earn 2 or 3%. That's a joke. You invest in gold because there's nothing else to invest in.
One more here.
Okay. Thank you for a nice presentation.
Thank you.
Just one simple question. In Denmark, only 6% of the money is cash.
Correct.
The rest is digital money. How does that affect on your gold situation?
Oh, well, here's the thing. The more people are into digital money and the less they're into cash, the more the overall society is vulnerable should something happen to the computerizing system, should something happen to the banking system, should something happen, this would be a big, massive disaster. I am not saying it will happen. I am saying there is an exposure of society to risk. Even now, the central bank is beginning to worry seriously that society has shifted too much to non-cash transactions to the point where it risks social stability should possibly something happen to that system. So the more people are in digital cash, the more you should have a little bit of gold and silver coins on the side as a protection. Again, it's not exactly a tool to make money. Yes?
One last final question.
Final question. Okay, it's a double question. Sorry about that. Thank you very much for an interesting presentation. First of all, do you physically need the gold bars or the gold coins, or can you buy a document and you keep it somewhere safe?
Buy the document. Don't trust the document.
So you need the gold.
You need the thing. You need to touch it. You need to feel it. You need to put it on the scale. It's got to be 31.14 as exactly as the ounce is. And you need to have it somewhere stored in your house.
Yeah.
Where you store it, the way your grandmother and grandfather did store it.
Okay.
You know,
And
you gotta have
second part is the taxation in Denmark. You can buy real estate as a private person and you don't have to pay tax
Right.
on your gainings. And I heard it's the same when you invest in diamonds. Is it the same for gold that the gaining is not taxable?
Personally,
and you cannot deduct the loss?
I don't know, cannot give you informed about taxation on capital gains on gold. Somebody else will know.
Jeg har jo desværre en baggrund som jurist og advokat, og generelt så beskattes det som anden personlig indkomst, hvis du opnår en fortjeneste. Nej, det er lidt underligt, hvorfor skat har valgt at kigge på det på den måde, men desværre forholder det sådan lige nu. Ja, vi skal til afslut, kan jeg forstå.
Vi skal til afslut. Jeg skal ud og købe nye hvilesesringe.
Fantastisk. Det er jo så ikke en god investering. Bare lige til sidst, hvis I vil vide mere, I kan lære mere inde på vores hjemmeside, eller få en stand. Kom over til vores stand og få en snak. Vi har en hjemmeside, tavex.dk. I kan tilmelde jer vores nyhedsbrev. Vi har også lanceret en podcast, der hedder Peters Guldkorn. Og som sagt, vi har et gratis seminar i morgen. Professor Petrov er der fra 18 til 20 i børsbygningen. Og det er gratis. Vi byder på lidt til halsen osv. I kan tilmelde jer via vores hjemmeside eller komme over til vores stand. Der er plads til omkring 50-60 mennesker, og mere end halvdelen er taget, hvis ikke alle allerede. Men der burde stadig være mulighed for at deltage i morgen. Så det er endnu mere af det, som professor Petrov har talt om, og endnu mere dybdegående. Så hvis det har interesse, er I mere end velkomne. Ellers så er I velkommen til at sende os en mail, det er så til min kollega Nikolaj, eller I kan ringe til os på 33 12 0907. Og ellers er I mere end velkomne. Det var, hvad vi nåede. Tak for i dag.
Tak for det. Thank you.
Can I ask you?
Yes. Please, I'll be at the Tavex, around the Tavex